All right, three things in 3 minutes. Let's get it. So, how does a war halfway across the world impact a family shopping for a house right now? Well, more than you think. And let me break it down. So, when Israel struck Iran Thursday night, markets reacted fast. Stocks dropped, oil jumped. But here's the curveball: mortgage rates actually rose. And that's not what usually happens. In most global conflicts, money rushes into bonds. And remember, mortgage rates are determined by the bond market. And so you would expect this to push rates down. But as of Friday morning, it didn't. And here's why: Israel targeted nuclear and military sites. They didn't hit the oil infrastructure of Iran, but that threat of a disruption to crude has sent the prices skyrocketing like 8% this morning. That's got the bond market nervous about future inflation. Rising oil, rising costs, stickier inflation, higher mortgage rates. Bottom line, rates aren't just about fear, they're about inflation expectations. And today, those inflation expectations are rising. Number two, here's a reminder about something we seem to always forget. Top agents don't win clients with slick pitches, they win by asking the right questions and listening. It's called discovery, and it's one of the most underrated skills in our game. Here are three questions I love to ask early during my first call with clients. Number one, what's your biggest fear about this process? Opens the door to honesty and gives you a chance to be their calm in the storm. Number two, if everything went perfectly, what would this process look like for you? This is about shifting the energy from stress to vision. And number three, what's changed now that made this the right time to look at purchasing? This one cuts right through the fluff and uncovers the urgency, motivation, and the emotion. So stop listening for specs, bedrooms, zip codes, none of that matters. Start building trust, because trust is what gets us hired and what gets us recommended. Finally, quick market pulse. So over the past week, we've seen rates, or 2 weeks, I guess, we've seen rates drop about anywhere from eighth to a quarter, as we've seen friendlier inflation numbers and higher than expected unemployment. So rates dropped from around 7% a few weeks ago to something closer to 6.75 or 6.875 as of right now. So, bottom line, rates are trending a bit lower, even if just slightly, on inflation and unemployment numbers. We will see how global stresses impact that going forward. But for right now, we're looking a little bit better than we were just a few weeks ago. All right? Y'all got this.